Hello, everyone.
Hello.
We're pleased to welcome you to our MSP webinar. I'm Marcin Majewski, founder of Aventis Advisors. We're in mid-market M&A boutique, and one of the things we are most keen on these days are MSPs. So we're going to tell you why, how to value them, and how best to prepare for a sale of an MSP, and how not to maybe make mistakes when buying one. Philip, please say
Yeah,
something.
I'm Philip, director at Aventis Advisors. And over the past couple of weeks, we had a lot of conversations about MSPs, and it feels like a lot of investors are very interested in that topic across the US and Europe and other parts of the world. So it's a good time to discuss this, discuss the valuations and where that industry is going. So I think with that we can begin.
Maybe a small remark on how we run this for those of you who are for the first time attending our webinars. So we have a deck, which is data packed, which we will go through. As we go, please feel free to make any questions in the chat box, or Q&A box, and we will take them after we finished our overview. Good, so let's dive in.
Yep, we should be showing now.
Yes. So what do we begin with?
We start with MSPs, VARs, distributors, because there are a lot of questions on how to differentiate MSP and VAR, and are those business models different or similar? How they're valued? Then we're going to talk a bit about valuations, factors influencing the MSP valuations, and a couple of case studies about roll-ups in that space and how acquirers generate value. And in the end, something for the sellers as well, how to prepare your business for sale. So what is an MSP? A lot of people are kind of trying to differentiate this business model, and there's a lot of buzz around this abbreviation. So here, there's a question, and it's of course managed service provider. But the bigger question is, how is it different from all the other business models in IT services? And we decided to start with a bit of an overview of a landscape of IT services and stuff that is adjacent to MSP and that MSP businesses are commonly also doing. So, there are a lot of services. We focus here on four, starting from the lowest margin, lowest value add to the highest. And the first one is distributors. So those are bulk intermediaries between manufacturers of hardware and the end clients. And those businesses are usually high turnover, low margin, very asset heavy, a lot of capex there. And this is what some companies that are value-added resellers or MSPs, the business they are doing, but mostly it's all consolidated. It's all covered by companies like Arrow, Ingram Micro, and those operate all over the globe. So they're in Europe, they're in North America, Asia. It's not a lot of activities there. It's not a lot of interest, but that's kind of one part of the service business and of the value chain there. The next one is value-added reselling, and that's one step closer to the MSP, and that's what a lot of MSPs are also doing, which means supplying hardware, software as a whole project. So they're not only supplying this, but they're also helping implementation, helping selecting the vendors, and really advising the client on what's the best solution here. And that's a bit higher margins in distributor, but still the organizations are generally sales focused. So it's a lot of responses to RFPs, big projects, but a bit higher margin. So a traditional MSP or a pure play MSP would be a company that does only services. So stuff like help desk, first, second line support, networking, backup, and generally covering IT infrastructure of a client. So typically a client will call to their MSP with all their IT needs and ask questions. Those are best in eyes of the investors because you have recurring revenue. So customers are paying every month a fixed fee, and then stable high margins. So this is a brilliant investment for private equity, stable revenue, the market is growing, you can roll up a couple of companies together and get some synergies from it. One step further also, a niche which we see a lot of MSPs are developing to is cloud consultancy, although those are quite different. And in here, the competition is also quite different. So those businesses advise on cloud migration, implementations, they resell cloud providers. And those are kind of should be the best because they have the highest multiples there, highest margins there, but they are also project-based. So compared to recurring revenue business of MSPs, those may not be as great in terms of private equity or any other investments. Yeah, so here during today, we're going to focus a lot on MSPs, but we want you to bear in mind that those companies are usually not pure MSPs, and a lot of them doing some VAR activity or cloud consulting. So it's all a bit of a mix depending on where the company operates and what they can earn money on. So moving on, the multiples on the public companies. Marcin, you want to talk about that?
Yes, yes. This slide paints a great story and a great success story for, and basically all business models, maybe except for distributors, but definitely both VARs and MSPs have been on an upswing in valuations, and rightly so, driven by increasing tech spend in IT in general. But we see the biggest uptick for MSP multiples over the past decade, so by 52%, and this is only on an EBITDA multiple basis, so it doesn't consider the EBITDA expansion also. So it has been a great investment thus far. It seems its value, MSPs are now valued higher than the rest of the market in this subclass. So as usual in our webinars, we make a bull case and a bear case might happen to these valuations. And today my job is to make a bearish case, because I mean broader market shows that we are somewhere along the line towards a big mega bubble in the market, and obviously MSPs are part of it. So that is one thing that that makes me a bit concerned about these valuations. Second thing, I mean, the model is beautiful for MSPs with the business model with recurring revenue, but there is not much growth. So I think this valuation is more than fair for what MSPs really are. There isn't that much innovation in this space, and also AI poses a huge risk, because a lot of the work that is done by MSPs will be simply automated away eventually as the systems get smarter and customer service gets smarter. I think there will be less value add from MSPs. So that's my position. Slightly bearish, but all in all, I think these are very sound businesses. I just think that that a lot of the value accrual that has happened over the past year is fairly compensated already, and I do not see that much upside from here. Philip, what's your take?
Yeah, I mean, just to add to your point, I think the average or median growth rate for the sample is below 10%. So that's what Marcin is referring to, that they're not growing too fast. Yeah, so with a bullish case, I would counter that AI is actually positive for MSPs and for outsourcing trends of IT in organizations. I think it's becoming more and more complicated to have IT in-house. You know, you need to have cloud, you need to have AI, you need to have a lot of different services, networking and support and cybersecurity, you know, is being mandated across the globe for businesses. So you cannot have a person inside the company for all of this. So that will accelerate the outsourcing trends and MSPs who basically collect those people and have specialists in each of those niches. So that I would think would be one point. And another one is AI may allow MSPs to capture some margin. So as they try to automate some of the tasks. Maybe part of this automation benefit will also accrue to MSPs, and they will be, as they have less people, fewer people employed, but higher revenue from that. Yeah. So if I were to make a bull case, let's say as the outsourcing will continue to grow, MSPs will benefit from that, and AI actually will reduce some pressure on costs and on people cost, which is a big part of any IT service business.
These
Yeah,
are
so
valid points for sure. I think like in any industry, there will be winners and losers. And the AI forward companies, I think, will stand to benefit, but anyone who falls behind on AI adoption will struggle probably. So a lot of stuff to think about for sure for all these businesses. But I think it's a great idea for AI rollups that can reinvent this business model. So acquiring MSPs by AI rollups, I think that is that will be a game changer here.
yeah, like if there's an investor who can not afraid to get hands dirty and really dive into those businesses and integrate, change them, turn around, could be very, very valuable.
Yep.
Yeah, so kind of here we discussed a bit about the public markets, and I also need to warn you that on public markets there are not so many pure MSP players or players which have a lot of revenue from MSP. Most of the roll-ups are still private parts of portfolios of private equity funds. So to get a better idea on valuation, we usually look at private multiples in MSPs, and here we managed to collect some 80 to 100 transactions where EV, EBITDA multiple or EV revenue multiple were disclosed. So what we're seeing in those private transactions is that the median multiple is around 9 times EBITDA for a deal with a value of $32 million. So if you calculate back from it, the implied EBITDA is around $3.5 million. So a business with EBITDA of $3.5 million that probably does $15 to $20 million in sales. Yeah, that's where you can see a multiple of 9 times. And with IT services, the size effect is very important. So smaller businesses get lower multiples, larger businesses get higher multiples, and Marcin will discuss this a bit further.
Yes, in this slide for a broader sample of IT services, because our MSP sample was a bit small, we show how value accrues depending on the size and why the MSP rollup play is such a beautiful idea. Because if you just take, let's say, 10 companies, if you're lucky to find 10 MSPs for 5 million, so they would be valued on average at 5.9 multiple, and you roll them up into a mega MSP with 50 million revenue, you basically double your money just by doing this simple roll-up play. Obviously, life is not as simple, and merging MSPs, integrating them, isn't that easy. But these numbers are quite convincing, and this explains really why we're seeing so many MSP rollups now being created, and a lot of people pivoting from other private equity investments into this space. And so this is very interesting how this will play out. Yeah, so that's it on this one. I mean, this is similar across the board in this game of IT services, M&A.
Yeah, I think it's what you see in other segments of IT services. In software, it's also the same. Larger companies are getting higher multiples. But what I wanted to add is that it's not only an anomaly and financial engineering point, but the smaller MSP businesses are really a bit riskier. Yeah, they have a lot of dependent on the founder. they may not have a full cost base, so they may not have like a full administration, HR, or sales function developed. They may have higher customer concentration and just inherently more risky. So like rolling up and taking together 10 MSPs and making one bigger MSP, it takes time and effort. So that's why the difference is also there. It's much easier to buy one $50 million company than 10 $5 million companies. So investors are kind of rewarded for that work in a way with the multiple arbitrage that we're seeing. Yeah, so here we kind of put together a small table about what really drives MSP valuations. And the first point is what we just discussed, is a revenue size. So anything which is below $3 million in revenue, and it's probably going to be less than $500,000 of EBITDA, is quite difficult to sell and will get not a very high multiple, while everything which is 10 million and above, and typically this will have 20% margin, $2 million for EBITDA. That's where you get into this higher 8 to 10 times EBITDA multiples. What's also super important is your revenue growth. Of course, if you're declining, it's probably not the best time to go to market. It's better to wait out for it and try to turn this business around. It's one of the biggest factors in IT services valuation as your growth rate. Then of course your current revenue. I think it's going to be a very tough sell if the business's recurrent revenue is less than half. Then all those MSP roll-ups and acquirers may not even bid for it. They have a very specific mandate usually, and they know what they're looking for. So if the recurrent revenue is less than half of your business, it's going to be difficult, and you'd rather be classified into VAR business or project-based business, which has different set of acquirers, different different rules, but definitely not MSP. Customer concentration is also one of the most important questions that buyers ask. If you have a customer concentration more than 30%, and that's quite rare in MSP business because a lot of companies target SMB sector, but happens. And it's also what we're seeing is that they're very, very difficult to sell just because the risk of one customer leaving and kind of dropping revenue by 30% is too high. And then the last point is a churn rate, meaning how many of your customers are staying after a given year. And I think anything above 10% raises concerns. Basically, investors are looking for companies that are keeping their clients for long term, and that in combination with recurring revenue, what makes this business model attractive. So if we were kind of to guide founders or acquirers in valuations, yes, and 4 to 6 times EBITDA for the smaller businesses, and that's where most of the transactions take place, and then 6 to 8 for mid-size, 8 to 10 for the larger best-in-class companies. That's what we're seeing from our data, from transactions, and that's what we're actually seeing on the market and what buyers and then sellers are telling us. MSP roll-ups are plentiful, and here we wanted to discuss a bit also about a bit of a dynamics between buyers and sellers. From what we're seeing now is that there are many more buyers than sellers, and there are a lot of roll-ups that has been funded by private equity funds. There are new companies that are being started right now, and a lot of funds are chasing this MSP thesis. This is coming to Europe more and more. This started in the US. That's been popular in the UK. What we're seeing now is that it comes to continental Europe. So now, when the number of buyers is large, may be a good time to sell. Yeah, it's always better to sell when the overall market is on the uptrend and when there are a lot of buyers chasing sellers. Then, thanks to buyer's curves, and multiple bids for your business, you may get a better multiple just because someone believes in your business a bit more. than the other person, and you may get a premium valuation. Like there are a lot of roll-ups. The roll-ups are kind of moving down market because there are not a lot of targets in 2, 3, 5 million EBITDA range. A lot of companies are actively looking at smaller businesses. So if you're in that place where you weren't getting a lot of inbound interest, but you're starting to, I think this may be a good time to consider the sale.
Yes, especially for companies with little growth, because it gets risky. We've seen this happen in other industries that there is massive consolidation on the lower end until kind of there are too few targets, and then liquidity dries up because people lose interest and they move on to the next shiny consolidation play. So definitely you should weigh this quite carefully, whether it's better to wait and grow, because this consolidation wave will last for 5-10 years probably, but will wane eventually, and definitely will leave a lot of companies behind if you don't catch the train on time.
And I think a lot of buyers, especially the experienced ones who've done acquisitions already, they can really add value to MSP, and they have the playbooks, they have the
Yeah.
knowledge, they have benchmarks, KPIs, and they try different things, and they have some financial capacity for larger investments. So if you're willing to stay on and continue with that, this could be a good journey.
Absolutely. There might be a lot of upside in this.
Yeah. Do you think there are too many roll-ups nowadays, Marcin? What's your take on that?
Well, I think a lot of them won't have stellar returns. Um, I think, yeah, I think this is just a herd effect that people are jumping on this opportunity because everyone else is, and they don't necessarily know what they're doing or have what it takes to do it. So, but a lot of them, I think, will just not make their first investment and will go out of business because they can't find anything. Uh, but those that do and
Mhm.
have experience, I mean, we're seeing a lot of people, for instance, take their experience from Constellation software or similar companies and really applying the same playbook to MSPs. And that makes a lot of sense because a lot
Yeah.
of characteristics, underlying principles, how MSPs operate are similar to software companies with recurring revenue. Mm, so, well, we'll see. We'll see how it develops.
I think
But
the source in what you said is Constellation software and their kind of sourcing strategy. It also can be applied because it's quite difficult just to find MSPs. You really need to cast a wide net and look for MSPs and keep in touch with them and wait. Yeah.
yeah, yes,
Okay.
this is for the patient people.
Yeah. So here we have an example of one of the European roll up or consolidator merchant. If you want to talk about it.
Yeah, this is an Italian company, and we wanted to illustrate also the cyclicality and how the public markets drive valuations in private deals, and why you should be conscious of what's going on, and why this is actually a good time to sell, because valuations are still relatively high compared to historical standards. And we see here, illustrated by the COVID boost in valuations, that this particular company has been acquiring the logos at the bottom, and they started quite low. Then once COVID hit, they got very bullish. So they started at 4.7, paying 4.7, 4.5. They peaked at 8. Then they have a big gap. And now they started buying again, but already at that lower multiple, 6.8, as you can see. So timing the market and understanding where the wind blows from is quite important for a good exit. So I mean, COVID was exceptional, so I wouldn't take that into account. But still, the valuations are very good, and the big interest in MSPs signals that you should take this. If you're getting offers for your business, if you're seeing interest, you should take it seriously, because you should not take these valuations for granted. I don't think this will sustain for a very long time.
Yeah, I think it's a very interesting example because it's a listed company, so we know a bit more about the multiples they have. Usually, it's all undisclosed, but here we clearly see that they are themselves traded higher, and just by acquiring lower, they were able to grow the revenue quite a lot over the past years.
Yeah, I mean that's the other example how the multiple arbitrage works, but not between larger and smaller exactly, but between public and private markets. So we're seeing here that basically 2 times the public multiple is 2 times the private multiple, or more even, as you see in the COVID times. So this is how this roll-up play or consolidation play works in real life, and how you can make money off of it.
Yeah, so coming back to the premium valuations and how to make sure that you get the best valuation, a lot of that is preparation and kind of being ready for the buyers when they approach you, and making sure that you have all the numbers in place. And the first part is just financial readiness. So you need to know your historical financials. You need to have a good forecast for the coming 12 months. I think that's one of the first points that the buyers will ask you, and they will ask you, of course, first about your business and what you're doing, and your revenue breakdowns to qualify you as an MSP. But in the end, the valuation is a financial calculation. So your revenue and profit projections are super important. So you need to make sure those are clear and understandable. A lot of companies, when they're private, also have personal expenses in the company, some personal assets. The salary of the founder is either higher than market standard or lower. So it would be good if you're ready in for sale to eliminate that or to set that to a market standard. So you have a clear financials that will just make life easier for everyone. And one last thing that we're also seeing sometimes in MSP is that they're not raising prices fast enough. And if there is a potential, if you haven't raised prices for the past 3 years and you feel like you have the potential there and you'll not lose a lot of customers because of that, and you're making good service to them, then it would be very good to start that before the transaction, so you can lift your margin a bit beforehand. And the second biggest checkpoint is your organization. And that's especially important if you're looking to sell your business and retire, or kind of move to some other challenges, is that you need to make sure that the organization will sustain without you eventually. Most of the buyers will ask you to stay for a longer term or continue to run this business. But if you really want to retire in 1, 2, 3 years, then even before the sale is the time to start preparing the succession, start training, kind of handing over key client relationships, handing over your business responsibilities, and if it goes well, even maybe resign formally before start of the sale, so a future buyer can see that organization truly runs without you. A lot of times, a founder can argue that it's all great and it's all set up and there's a management layer, but it is difficult to believe. And if you're not in the company formally, and if you're not there day to day, then it's much easier to accept that you as a founder, as an owner, is not needed in this business, and this reduces risk. And the last time is just a process checklist. So you need to build your equity story. So think about what are your strong points. Maybe it's that you serve particular set of industries and you can show yourself as a vertical MSP. Maybe you have very low customer concentration and long customer relationships for 10, 20 years. Maybe it would be that you're especially strong in some part of MSP, like security is gaining popularity and is valued a bit higher, just because the growth rate there is faster. So kind of understanding your strong points. And then we also typically recommend building a relationship with buyers even before you consider a sale. Just don't decline the conversations, talk to some people. A lot of them will have acquired a couple of MSPs, so they've seen the numbers of different companies, they've seen the KPIs, and the conversation like that can just give you a couple of ideas of what to change, how to prepare, how to position yourself, and just from the questions they will ask you, you'll understand what is important. So we always tell the potential sellers that if a buyer approaches you, you better not disregard it, but speak maybe just as an introductory conversation and see where it leads. Yeah. So anything else here, Marcin, or we can sum up?
Of course, talk to an M&A advisor, such as ourselves, to get an objective view on valuation and how you can improve your business to get a premium valuation further down the road. If you want to put in the effort and time to extract more or create more value in your business.
If you have one offer on the table and you're considering it, there is always a way to get more. There are many buyers who are actively looking. So an M&A advisor can just structure this process and make sure you get different offers at the same time. Everyone gets the same set of data, and then you compare and decide what's the right way for you. The summary, Marcin, you want to do the summary?
First point, MSPs are definitely the talk of the town, the most interesting segment, I think, maybe not the most interesting, but quite exciting. And I think for investors that are not maybe deep into technology, that don't follow the hottest trends, I think this is the part of IT services that they can understand the best and because a lot of the common sense, let's say, approaches can be reapplied from other industries. So if you've been previously doing retail roll-ups, then or I don't know, medical, then you can also do MSP roll-ups. So I think the liquidity, the interest comes also from the relative ease to understand the business model, because it's difficult to invest in AI startups with high barriers to entry. Here there are fewer barriers to entry for investors. So this explains the why there is so much interest, and obviously the business model stands out from other related, let's say, business models. So we see many companies in, for instance, the VAR business that struggle to find a buyer, even though they sell at lower multiples and potentially the return on investment can be higher. But still, owing to the fact that there is this recurring revenue model, MSPs tend to be safer and therefore more attractive investments for a lot of people.
Yeah, I think there's been a lot of, different hypes on the market in IT services and outsourced software development, and then systems integrators and all other project-based businesses, which were growing really fast and very profitable. And now this market slowed down and companies are kind of in worse state. So this MSP, in comparison, it looks much better because it's a recurrent revenue and rather simple, understandable business for the investors.
The defensive play, for sure. Roll-ups we've talked a lot about. We're seeing more and more emerging. So, and a lot of individuals also want to start rolling up MSP. So this is definitely the biggest development, I think, of the last few years. And it might peak soon, probably. I'm guessing. I give it 2-3 years, probably, and when people move on, probably to something new.
Yeah.
Yes, and scale. Scale is your favorite topic, Philip. You can talk
Yeah,
about it.
yeah, I think just for MSPs, the scale is super important as in any other business. So if you're kind of looking how to leverage your valuation, how to improve it, and just need to continue growing and thinking about accelerating growth, maybe do a smaller acquisition yourself if you know if
Yeah,
you're a smaller MSP with 50 people and a 10 people MSP in the same town and you've known the founder for 20 years and he or she wants to retire, then it may be a good player to do a small acquisition yourself, get a book of business to kind of make yourself bigger and prepare for an exit yourself. But of course, don't forget about the fundamentals. It's not only the size, the recurrent revenue percentage, or the profitability are also super important because on that part, it's very easy kind of to go to the left part of the value chain that we discussed in the beginning and start doing big hardware, software resale projects at low margins and just ramp up your revenue size. But the buyers will see through this real fast. And one of the very first things they ask is your split of your revenue to recurring, non-recurring, what's projects, what's resale of hardware, what's resale of software. And if you're gonna be growing revenue with that, at some point, you may even not be a great target for roll-up because they'll say that 70% of your revenue is resale. Yeah.
yeah. But all in all, so we remain bullish for sure on this industry. We're very excited. I think good times ahead if you continue growing. Good times ahead if you are an acquirer. Good times ahead if you want to buy. If you want to sell, I think it's a great time to find a buyer if you have obviously the right KPIs.
Yeah, I think it's a great combination of factors that came in this industry, that it's fragmented and they have recurring revenue and it's technology, so it's not declining, stagnated, but still growing, and this combination made this very attractive for the funds. And if the sellers are operating, are lucky to operate in that industry which is at the point of interest of everyone, yeah, it's a great time, I think.
Yeah.
So now we go to Q&A, and we have a couple of questions already, but feel free to ask more questions.
Okay. You can switch off the slide, Philip. Okay, first question. Do you see a correlation between big revenue size and low customer concentration? Not many companies which are best in class reach the big revenue number with low diversification in customer base. Absolutely, we do see huge correlation. I mean, it's hard to build a very large business and keep it correlated. I mean, probably the likelihood of high customer concentration is very reduced above 50, 100 people, probably, because very few
Yeah.
accounts would buy so many services from an MSP, from one MSP. So I don't think we're familiar with any large company that would have a high customer concentration. So I think that is answered.
Yeah, totally agree.
How do you see companies with multi-annual agreements handle raising prices? When is a good moment to do that without client pushback or worse, churn? That is a good question, but I think it's always a good it's always a good time to manage this, and it's better done sooner than later. I think with the reemergence of inflation, that is a risk also. Should get easier, probably.
Mm-hmm.
Better to avoid multi-year agreements for sure, if you can. I mean, obviously you can terminate, too risky, unless it's a drag. But yeah, I mean, it's always tough. It's always risky. There are consultants that do pricing strategies and help with that. I think a lot have done a lot of work for SaaS companies, and I think that that knowledge can be reapplied. So it's best to seek out advice from those people, and I think they can help you manage how to do it, how to manage this.
Yeah, I mean there are ways and data-driven ways to look at the profitability of your customers, look at how many tickets they submit, what kind of services they require from you to make it in a smart data-driven way, so you don't raise
Yeah.
prices on a customer who already thinks that you're not bringing a lot of value and who is a very profitable customer for you. Yeah, but as Marcin said, yeah, there are consultants who can help you with that and set up some tests with some clients just to see what's the reaction going to be, especially if you have a big customer base.
Yep. 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 Okay. Next point. How does HQ location impact valuation multiples? What geos have higher valuations and how much higher? I don't think we have a reliable data set to give a data-based feedback. So I think in general, probably we can say that there are markets that have saturated in this MSP consolidation play, like US, where it started. So it dates back probably 10 plus years, the MSP consolidation. And then this started in the UK, I think, because of shared characteristics. And then since, let's say, 5 years, Western Europe, it's happening in Eastern Europe already. So probably yes, coming from the US, the highest, UK also high, elevated.
Nordics.
Yeah, Nordics, uh, Western Europe probably moderate. I'd say if I were looking for value, probably I would go to Asia, mm, where I'm guessing, and we've seen that in public valuations, Philip,
Mm-hmm. Yeah.
that for instance, Japanese companies can be quite inexpensive. So yeah, so that's probably where it hasn't started yet. But like with all trends, they tend to be global, and probably someone is going to go after this market as well.
Yeah, I think depends a lot also on the number of buyers. And as the buyers emerge and there's more competition, they drive up the valuations. So as Marcin said, like USA, UK, Nordics, where you Google MSP roll up and you have 10 names pop up. Yeah, their
Yeah,
problem will be higher multiples than a country where there is a one MSP deal a year. Yeah, and the sellers are really struggling to find a buyer.
yeah, yeah. Or they can be maybe less educated and not be aware of the value of their business. So, I mean, as a buyer, you can exploit these inefficiencies. Probably smaller countries, they tend to be less competitive. But big countries like France, Germany, I think there are plenty of roll-ups. I mean, in France, we've seen so many emerging recently. So yeah, definitely smaller countries make better bucks. Yeah. Mm, okay. How do you calculate the churn for IT services company? Philip, would you
Yeah,
answer?
yeah. Is it is it churn based on number of clients lost in 12 months, or is based on revenue churn? I mean, both of those two are valid metrics. So one is so-called logo churn, how many customers you lost, and the other one is revenue churn. So both are fair. For me, if I analyze a company, revenue churn is more important because sometimes you may lose a couple of smaller clients, or you actually may fire those clients because just they're not profitable for you. So for me, revenue churn would be most important, and I take last year's set of customers, their overall revenue, and how much of that revenue you're lost this year. Yeah, and divide. So if your revenue was 100 and 10 of that revenue is lost, then it's a 10% churn.
Okay, next question. Do you see consolidation creating regional champions in Europe, or will the market remain fragmented? So I guess the consolidation is happening on two levels, I'd say. On a national level, when people roll up these small companies, 3, 5, 10 million revenue. But then eventually someone will roll up these country champions. And we're seeing that also. I mean, some roll-ups have multi-country strategy. Some focus on one country. But I think, I mean, further down the road, they will need to merge eventually. And so I'm quite sure we will see regional champions because there are a lot of synergies. You can centralize different operations like security SOCs, or you can exploit wage differences between countries and optimize back office functions. Or vendor relationships. You can also benefit on purchasing. So for sure, this makes a lot of sense, and I think eventually we will see a lot of these pan-European companies emerge. Although we're still early to this trend in Europe.
Yeah, I think there are some big consulting companies like Accenture, Cognizant, EPAM. They
Yeah.
do have some MSP offerings for multinationals, and definitely they're serving a client across a couple locations. They can serve a client from one point.
Yeah. Okay, we have one last question. I see now. Two questions. Okay. Question: what companies are in slide 5? I think
We're gonna share afterwards.
yeah,
We can add a note on
we
who is.
can then. Yeah. Okay. And I think we had a question if we'll make the slides available, of course. So we will send them out to everyone who's been so kind to attend. So I guess, Philip, we wrap.
Yeah.
This has been a great session. Thank you all for your questions and for joining. And I hope you have a good last week of August and last weekend of the summer or summer vacation. Still, we can enjoy the good weather. So wishing you all the best. Thank you very much for joining.
Yeah, thanks everyone for joining, and don't hesitate to get in touch if you have any more questions or would like to discuss your MSP or your MSP roll-up in more detail. Thanks everyone.
Thanks. Bye-bye.
Bye.